Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very good day and a very beautiful week of trading as well. And in today's markets, guys, well, the march of the S&P 500 and the QQQs continues to the upside. However, there are a few cracks forming currently in the market, guys, that we definitely have to address in today's video. Now, this morning, what happened, guys, is we got a consumer sentiment report that came in much weaker than expected, as consumers are still concerned about the high prices in the economy right now. So in today's video, guys, we're going to go over that consumer sentiment report and see exactly what consumers are saying about the status of the economy right now. Thereafter, we're going to take a look at our major technical analysis rundown in terms of our major stock market indexes and see where a few of the cracks are appearing right now. And then lastly, we're going to take a look at our big tech names and see how big tech is doing and can they continuously uphold the market all by themselves. Now, without further ado, guys, let's get right into today's video. SPY up about 0.06%, QQQ up about 0.52%, but the problems come here, guys. Take a look at the one-day performance. One-day performance, even though SPY and QQQ were netly green on the day, the market is not very broad right now, right? Only a few names going up in semiconductors, NVIDIA, AVGO, obviously continuation from their earnings. Adobe up very nicely, projecting the QQQ a little bit higher with its 15% day after earnings. Google up a little bit, but we did have a little bit of weakness here. Apple pulling back a little bit, Amazon pulling back a little bit, Oracle pulling back a little bit after their gains. But look at the rest of the market here, guys. Not a very good picture, right? So what happened on Wednesday? The Federal Reserve on Wednesday pretty much said firmly that it maybe only expects one interest rate cut by the end of the year. And now markets, although they have been green since then in terms of the SPY and the QQQ, the rest of the market is not quite having a very good time. Usually when you hear higher for longer from the Fed, it just means that they're pushing back the risk on trade. So it could potentially be a catalyst for a rotation back into value stocks as investors and institutions alike play a little bit more of a defensive game. However, guys, that rotation so far is not here. Most of all your value sectors are down. Now, we do have a few little outperformance in consumer defensive, Walmart and Costco, but for the most part, guys, everything down here, most of your defensive sectors have been quite down. And it's not only on the one day, guys, on the 1 week as well. Take a look here. Big tech largely holding up the entire market, once again, similar to how they were doing in January and February. Now, on the 1 week relative, guys, still the bottom half of the market not cooperating, right? And it gets even worse, guys, when we put this on a 1 month relative. We've been saying this for about the past 2 weeks now, how the market is kind of struggling, even though it's pushing new all-time highs. It's not very broad. Well, take a look at the 1 month performance, guys. Once again, big tech and a few of your big earnings gainers. Think of Costco, Walmart, Eli Lilly coming back as well, NVIDIA, AVGO, of course, Oracle, Adobe with their earnings, Apple with their skyrocketing move after their most recent AI presentation, right? Microsoft having a good time. But look at the bottom half of the market over the past 1 month of trading. You really can't find any green whatsoever in terms of rotation, except for names that have had very big outperformances in their earnings. This is definitely a problem, guys. Couple that with the fact that we're also approaching overbought conditions on the SPY, overbought conditions on the QQQ. It leads us into a little bit of a sell-off recipe for the markets, in my humble opinion. One of two things definitely has to happen, guys. Either QQQ is going to pull back pretty considerably and bring a lot of this froth in big tech down. Thereafter, the bottom half of the market will have to make up for tech pulling back ever so slightly, guys. Tech cannot continuously move up in a straight line forever, right? Eventually, it will need to consolidate. What needs to pick up the slack when tech does consolidate, guys? The entire rest of the market. So they do have the weight to offset a little bit of tech weakness, but we definitely need to see that broad market rotation. If QQQ starts pulling back in a meaningful way, we need to see cooperation from the bottom half of the market here, guys. It's absolutely crucial to maintaining a very healthy bull optimistic landscape right now. Now, option number 2 is the less pretty option, of course. Option number 2 is when QQQ consolidates, it really triggers a more broad market sell-off. The bottom half of the market doesn't cooperate and continues dropping as well. That would be notably bad, and that is when you can really get these deeper cuts on weekly timeframes and even some extended potential monthly consolidation. So not leading into the best recipe right now. The rotation narrative is still on the table for now, but we also can't forget the other more negative narrative, guys, that we could potentially be walking into right now. Seems as though, guys, Even though we've had very good data this past week in terms of CPI, in terms of PPI, it appears as though the market is now throwing a little bit of a tantrum because it is not getting that clear-cut direction for 2 or 3 interest rate cuts this year. Now the narrative has shifted, guys, from worries about inflation to now worries about keeping rates too high for too long and really starting to negatively impact the economy and the jobs market, right? So I'm noticing this narrative shift over the past week with the Federal Reserve meeting. A lot less emphasis is being put on inflation right now because it's coming down, and a lot more emphasis is being put on keeping rates too high for too long, squeezing consumers and businesses too much, and pretty much triggering a soft form recession. So that is the narrative that the market is currently embarking on right now. So before we get into more technical analysis here, guys, let's do a quick little summary of what happened on consumer sentiment this morning. You can see we were expecting a read of about 72 and we got 65.6. That is a very bearish read. Now, keep in mind, guys, this scale right here pretty much runs all the way to, for all intents and purposes, about 110. And you can see here on the graph, let me just blow it up right here. On the graph from Yahoo Finance, we can see that we're pretty much approaching the lowest levels we've had since, you can go back pretty much to September of last year, and some of the lowest reads that we've been having before breaking under this 65.6 mark right here, pretty much some of the lowest reads we've had since we've been in a very bullish upswing on the markets since the entire rally started in the month of November, right? So why was consumer sentiment this bad? Why is it really falling off a cliff, notably from April into May? Well, let's have a quick look here, guys. Right? Let's have a very brief look into the article and I will take you guys through it. So consumer sentiment hits lowest level since 7 months. Consumer sentiment tumbled in June despite largely resilient growth in the US economy, which is true, as higher prices remained a pain point for Americans. Assessments of personal finances dipped due to modestly rising concerns over high prices as well as weakening incomes. This is very curious because, as we've seen in the most recent CPI report, average hourly wages are actually surpassing the rate of inflation. Consumers are actually gaining purchasing power, not losing, but that is not how they feel, right? The data doesn't say that, but what they feel is completely different. And we're going to get back down into that lower. And Jerome Powell even touched upon this in the Wednesday meeting. Overall, consumers perceive few changes in the economy from May. Now, moving on further down below, broadly, the decline in the consumer sentiment index represents a continued trend among consumers who are fed up with higher prices, regardless of whether inflation is cooling and the labor market remains on solid ground. They just don't care, guys. Keep in mind, most of everybody who's not in the immediate financial circle, right? People who don't look at the stock market every day, people who don't look at economic headlines, they don't really care what the Fed has to say about the status of the economy and the jobs market. All they care about is when they go shopping, do they feel rich or do they feel poor? And as of now, as a general consensus, middle class and below, everybody is really feeling the pinch of higher prices and especially higher rates, especially in terms of financing, whether you're looking for, house appliances, right? Refrigerators, dishwashers, washers and dryers, stuff like that, or even larger ticket items such as cars or homes, right? Now let's continue. During a press conference on Wednesday, Federal Reserve Chair Jerome Powell said it's hard for anyone to have a definitive answer about the disconnect between Americans' feelings on the economy and the actual data. This is the question I was looking for in Wednesday's video, but I couldn't find it. One reporter, I forget what her name was, she asked, Chair Powell, since all the data is pointing towards the fact that the economy is strong, the jobs market is decent, and inflation is coming down. So why do Americans feel as if the economy is doing bad right now? And here's what Jerome Powell had to say, which was a point of contention for a lot of people who listened to this. It kind of sounded like he was a bit disconnected from the average consumer. Take a look. People experience what they experience, Powell said. All I can tell you is what the data shows, which is we've got an economy that's growing at a solid pace. This is true. We've got a very strong labor market with unemployment at 4%. That is very true as well. It's been a long time since we've had, a long stretch of time with unemployment at or below 4%. A very long time. That's true, guys. Employment's been pretty much at record levels of lows now, which you could not pretty much say in the last 15, 20 years. These are record levels of low unemployment right now. Almost record levels, but you guys get the point, right? Now, here's what he had to conclude on. In the meantime, it's going to be painful for people, but the ultimate pain would be a long period of high inflation. Now, nothing he said is wrong. Is it a little bit Is it missing a little bit of tact in terms of how he's addressing concerns of your average American? Absolutely, guys. But nothing about what he said is actually wrong. The economy is doing decent. The jobs market is doing decent. Inflation is coming down, and he is correct on this last point. The ultimate pain would be a long period of high inflation. Now, keep in mind, guys, I keep bringing up this graph a lot when we do these analyses, either on just pricing power and inflation as a whole. We have to understand where we came from, right? So before 2020, prices were really coming up in a streamlined 2% manner like this. So you really didn't feel the price, the weight of higher prices on a year-to-year basis because they were increasing ever so slightly. What happened in late 2021 and early 2022 with high inflation? Prices went like this. So now, before you might have paid for, let's take an average thing, right? Like a bottle of water, let's say. You might have paid $1 for a bottle of water. Now, with inflation that has skyrocketed like this, maybe now you're paying $1.30 for that same bottle of water, right? So now prices have come up considerably. Now, I know obviously not all goods and services have gone up by 30%. It's just a theoretical example we're doing right now. Technically, it should be about 7-8%, right? But now, what's happened is we've had a very high period of inflation where prices have gone up very quickly. And what people want desperately to return to the prices of 2020. That, unfortunately, guys, without a deep form recession is not going to happen. Companies are not just going to drastically drop their prices and drastically drop their profit margins in the process if they don't have to, right? They only do that to stimulate demand when consumers have pretty much had enough and we go into a little bit of a recession where people just stop spending. Now, what we've returned to is a streamlined form of inflation around 2.5%, 3%. A little bit higher than the curve that we had back here. It is now doing this. So Jerome Powell is happy about this because we're looking more and more like it was back here. But what he really can't explain away is this large increase in prices that will not go away, guys. At this point, it is baked into the economy, and it's very tough for a lot of people to understand that. And I don't expect a lot of people, everyday people who aren't into finance and economics, you don't expect them to understand that, right? They were used to prices like this and they want them to come back. Unfortunately for them, guys, it is probably not going to come back. So now what we have to wait for, guys, is people to adjust to the new pricing levels in the economy right now, readjust their purchases depending on their income, personal income, and spending power. I know it's very unfortunate, guys. A lot of people felt a lot more rich back here than we are feeling like this, even though they make the same salaries or even more. It's just a byproduct of a little bit of high inflation that lasted for about a year and a half. Now, what Powell is saying over here, right, the ultimate pain would be a long period of high inflation. That would look something like this. And that is something that nobody wants, guys. If you want to see what extremely high inflation looks like, there is a number of countries in the world that have gone through that and have almost ruined their entire economies in the process, guys. Think of a country like Zimbabwe. Think of a country like Venezuela as well. It is a very, very rough process. Your money essentially becomes absolutely worthless. So nobody wants that, right? So just returning to this normalized, streamlined increase of inflation between 2.5%, 3% is not the worst thing in the world, although consumers do feel the pressures, guys, right? It's going to take a little bit of an adjustment period, arguably years, for consumers to get used to this, for their paychecks to start coming up, to start supporting these new prices as well. The economic cycle, guys, is an extremely long one. Do not expect the Federal Reserve to snap its fingers, drop rates by 2-3%, and all of a sudden everybody feels rich again. It takes a lot of time, right? So that is just a little bit of a tidbit on consumer sentiment and why people are feeling the pinch under these new high prices, even though inflation has been coming down. Now, let's move directly into our technical analysis portion of the video, shall we? So, moving on to SPY. Looking at SPY, guys, very healthy daily uptrend. However, we cannot ignore the red flags. The red flags are right in front of us here. A very weak market breadth right now. Overbought conditions as well. And we are also going to take a look at two of my favorite indicators to look at, guys, when things just get a little bit weird out there, right? So take a look at this one. This is the percentage of stocks above the 50-day moving average. Normally, when you have markets at all-time highs, you should technically be closer to the highs of all stocks being above the 50-day moving average. But as you can see, guys, we're kind of near the lows of last April and even coming into the lows of last fall, even though we are at all-time highs. The drop in April was quite significant. The drop last fall was very significant. And now we're still putting in about a 36.5 read. Only 36% of all companies are above their 50-day moving average. That is not very good. The market is not very broad at all, guys. Very big indication of some market weakness. So what we need to turn this around is, as I've said, these guys right here, your outperformers, need to take a little bit of a breather. I'm not saying considerable drop. They just need to take a little bit of a breather, and the rest of the market needs to come to play ball. That is what's going to really start reversing this chart. Now let's also take a look at the percentage of stocks above their 200-day moving average, which is a longer form indicator here for the health of the stock market as a whole. And you can see, guys, we're at the lows of April. April was pretty much, for all intents and purposes, across a lot of names, a 10 to 15% drop. Right now, we are at all-time highs, and we're back to those same levels right here. Arguably the same levels as we had at the start of the quote-unquote correction that we had last fall as well. So once again, only 50% of stocks are above their 200-day. This was a stark contrast to just a few weeks ago, guys, when we're at a very healthy read of around 64, which is synonymous with where you should be when markets are pushing to new all-time highs. So far, we are just not seeing that. So the lack of breadth in the market could be the one thing that leads us into a little bit of a technical sell-off, especially due to the fact that we have overbought conditions right now. So the analysis remains the same. Still a very healthy daily uptrend, hunting for the daily higher low, anything above 531.70, looking for that daily higher low for the potential trend continuation. However, if for some which reason we pull back too much, roll over into a daily downtrend for a broader correction, well then, guys, we're going to have to zoom out to the weekly and look for a little bit of a weekly pullback here. Anything above 518.37, just going to be looking for a weekly higher low for potential trend continuation as well. So hopefully the bulls can keep it locked in. Hopefully the market can broaden out here, guys, but there's a lot of cracks forming. I would be very, very cautious at these positions, especially in names that have run a lot. Definitely not the most ideal time, guys, to be starting positions all the way up here. If anything, may just be a great opportunity to take a little bit of money off the table, maybe potentially write some covered calls on companies that you love, but you may think that they are kind of topping out, right? So that's a quick little analysis on the SPY. Moving on to the QQQ right now, healthy daily uptrend as well. Getting into fairly overbought conditions, guys. We have to be careful. Usually when we get this high on the RSIs, we could get a little bit of a pullback or at least sideways consolidation. That being said, guys, very healthy daily uptrend. Any move lower, going to be looking for a higher low, anything above 461.26, looking for the higher low for the trend continuation. If we pull back too much over the course of next week and set up for the daily downtrend, you guys know the drill, going to be looking for a weekly higher low, and then anything above 444, going to be looking for that weekly higher low for the potential trend continuation, right? All in all, the bulls are still in control, but we're looking a little bit frothy in terms of our valuations right here in terms of overbought conditions, and the market is not very broad. So please, please, please be very, very cautious in the next few weeks of trading until these things clear up. Now, moving on to XLF. XLF, unfortunately, breaking to the downside here, guys. Daily downtrend continuing on XLF right now. And now, guys, the official weekly downtrend is in. This is your first major stock market index that is now officially in a weekly downtrend. XLF has not been in a weekly downtrend, guys, since last fall, a very, very long time. So it has to be notable to us, right? So the bulls losing some ground here, but we are now looking out to the monthly levels to act as protection. The best case scenario for the bulls right now is maintaining a somewhat of a tightening range above our previous area of all-time high consolidation. Need to see them maintain a tightening range. If we break this line in the sand level right here, 39.53, it would be an official monthly downtrend, something we have not seen since this period in time right here. So looking not the best on financials right now. We are not daily oversold conditions either, so could have a little bit more room to fall. And this, guys, is a very, very funny aspect of the markets right now. It is moving completely in line with yields. Usually they have an inverse relationship to yields, right? But so far, financials have been coming down. Look at the drop in yields over the last 4 days on the 10-year, on the 20-year, excuse me, and the 10-year. Usually that is good for financial stocks. It eases some of the pressure that they've been facing as of most recently, especially with those unrealized losses on their bond holdings. But so far, not really doing much of a difference for financials here, still looking very, very weak. So what the bulls need to do is eventually we will need to get, as soon as this downtrend is potentially tapped out right now, how do you know that the move down right now is finished? We need to see a reversal in the hourly trend change. So far, that is not happening right now. We need a break of these levels on Monday. That would be your daily bounce underway. And then we will look how much of this daily bounce in relation to 41.29, how much of it can we take back to potentially set up for the daily uptrend. One thing I need to see from financial bulls, guys, if QQQ takes a little bit of a breather next week, financials needs to make up the slack. If all three of your major indexes, QQQ, XLF, and XLV, all go red next week and flush, guys, that is synonymous with fear in the market. It's synonymous with money exiting the market and could be a catalyst for a larger form pullback. So be very, very attentive to the rotations between QQQ, XLF, and XLV, right? If QQQ drops, it literally needs financials and healthcare to go up to support the weight that QQQ has in the markets, right? Moving on to XLV healthcare right now. Healthcare not looking too bad. This is one of the positive points in the market. Fully engulfing move, looking for the daily higher low for the daily trend continuation at this point, right? At this point, looking for the daily higher low, anything above 140.7, daily higher low for further trend continuation. Looking very good, building off our previous area of support, currently new support as well. The 26 EMA is right there as well. You can see the past 2 days, bulls reacting perfectly from this location right now. So what we need to see is a trend conversion from the bulls, because this is a very nice move up, but they need to confirm the daily trend change. On the weekly, not looking too bad as well, right? Weekly uptrend in motion. So curious to see, can the bulls do a good job of upholding this market next week? As I said, if QQQ takes a little bit of a breather next week, XLF and XLV have to continue to push to keep the S&P 500 relatively healthy, right? Now, moving on to semiconductors. Semiconductors, guys, overbought conditions, of course. Daily uptrend is completely gorgeous right now. No red flags at all, but you got to keep in mind, guys, NVIDIA and AVGO are now up a lot, right? NVIDIA pushing to new all-time highs seemingly every day, and AVGO just having pretty much, a 15% rally in the past couple of days. That is what's really keeping up your semiconductor indexes. But if you take a look, guys, in the most recent 1 day, they are pretty much the only 2 companies in the entire semiconductor list that's in front of us right now, the only 2 that are green right now. And if you take it up to 1 week, it looks a little bit better, but you can see that there's still a few names that are mixed, right? AMD not performing that well, obviously Intel, Texas Instruments, NXPI, but they do have a number of more stocks that reported beautiful earnings, such as Skyworks, such as QRVO, right? So there are a few earnings outliers so far, but it is just that, right? Earnings outliers for the time being. So we'll see how SMH goes over the course of the next week. But eventually this one too, guys, this one too will have to eventually, if we do potentially lose this daily uptrend right here, setting the daily downtrend, we will be looking for weekly consolidation, anything pretty much above 197.19, looking for that weekly higher low for the potential trend continuation. It is potentially starting to get a little bit rich right now here, guys, at these top end levels. The daily is considerably overbought right now, and we have run a significant amount. The bulls on semiconductors may just be getting tired. Even if we had an amazing weekly bullish close, guys, I wouldn't say that there's much left more in the tank, right? We may get a little pop above here next week and then may just start a little bit of healthy, keyword healthy, weekly consolidation. If that does happen, I'll be looking for levels down here, maybe towards 240, 235 at the lowest end, but that would be a big drop for semiconductor, guys. That would be pretty much on a 10, 11% drop on the indexes. They can afford the drop, but you guys know where most of that is going to come from. It's going to come from your bigger names that have run a lot, right? Just going to be a healthy consolidation, in my opinion. Now moving on to the Russell. So the Russell, once again, guys, this is why I say you cannot derive a perfect inverse correlation between yields and the equities market every single day. Sometimes the correlation is there, but sometimes it is not. So if you're trading solely on the fact that yields are down, so risk assets should be up, you are going to go through the washing machine quite often, right? Take a look here. 4 consecutive big red days on yields. That should be good for risk on assets, right? Well, as you can see, guys, the past 3 days of the Russell, nothing but pretty much downside after this explosive day on Wednesday, the morning of the CPI, really getting beaten down hard. So the Russell pretty much erasing any attempt at a daily trend change, setting a lower low. So unfortunately, still in this extended daily consolidation to the downside, which leads us into further weekly consolidation. Anything above 191.42, looking for a weekly higher low for the potential weekly trend change back to the bulls. However, guys, it is pretty much now or never for the Russell. Take a look at the size of this pullback, almost crossing the 618. I'll remind you, if we come any lower than this, the best the bulls can potentially expect is maybe just a tightening range. When we pull back 80% of a move, guys, it is excessively tough for any bulls to V-shape a 80% retracement move, right? That is why we say the expectation if they pull back more is maybe just for a furtherance of the tightening range. And obviously, worst case scenario, guys, is the potential weekly downtrend, right? We're not set up for that yet, but we'll take this one day at a time. But the Russell definitely not looking the strongest, guys. I keep reiterating that my preferred entry for the Russell at this point, guys, is as close as possible to maybe 190 as I can get, right? Looking for this monthly tightening range to play out using this prior range of resistance, which is now support, looking to use the bottom end of that as our last line of defense with these moving averages before maybe mounting a rally later on in the year when we have a bit more confirmation here, guys, about the timing and direction of the interest rate cuts. Moving on to the Dow Jones now. So Dow Jones also down about 0.15%. Dow Jones, guys, unfortunately, daily downtrend is underway once again. You guys know daily downtrend means that weekly consolidation is also continuously underway. What is the Dow Jones trying to do? They're desperately trying to reset into a weekly uptrend. The only problem is that the size of this bounce was not the strongest, guys. Size of this bounce only got up to about 50%, which does not guarantee the bulls have the best chance at reversing this into a new daily uptrend and start tackling the weekly. That being said, guys, they are reacting from our line in the sand level, right? 38,600 down to about 38,300. Last line of defense for the bulls. If we start flushing this to the downside here, guys, we need to look out for our last remaining weekly level, 38,000. If that breaks, guys, that would be a weekly downtrend, and the Dow Jones has not been in a weekly downtrend since last fall. So it's been a very, very long time. I wouldn't rule the bulls out just yet, but definitely not looking the strongest right now. Arguably, this is their last chance to dance to start resetting some of these daily uptrends. Now, moving into crypto. Let's take a look at crypto, guys, because crypto also is breaking down right now. Daily downtrend on Bitcoin as we speak. And even on the weekly here, guys, the weekly is potentially looking to roll over a bit. But the bulls have a lot of space here, guys. Anything pretty much above 56,000 is just going to be looking for that weekly higher low for weekly trend continuation. Would like to see the bulls put in a stop pretty much where they are now. That is the weekly 12 EMA. We have not really lost, except for a tiny little bit back here, in terms of a close. We have not really closed far below the 12 EMA ever since this rally started last October from pretty much $28,000 level. So as of now, the bulls are not looking too bad, not pulling back too much. They still have a chance at resetting the weekly uptrend. We'll take this one day at a time, guys. However, if the markets pull back as a whole, talking SPY QQQ, I do expect Bitcoin's pullback to last a little bit longer as well, which may just prolong this monthly consolidation that we've now been in for about 4 months at this point, right? Consolidating above our prior all-time highs, which is a good indication, but still, we have to be attuned to what the overall broader markets are doing right now. And the overall broader markets right now, guys, are not in the best shape that they've been, at least throughout this entire rally so far, right? Looking very weak. They're looking kind of as weak as they were early January and February. That came into reversion, right? Eventually, big tech was able to cool off a little bit, and the bottom half of the market did do a great job in propelling the markets further late February and March, but we will see if they can do that again. Moving on to Ethereum right now. Ethereum as well suffering the same fate as Bitcoin, so losing the daily uptrend right now, losing this range of consolidation, and now in a little bit of a daily downtrend. So daily downtrend continues right now. I'll remind you what you need to see the bulls do to reverse this. You need to get an engulfing move as high as possible in relation to pretty much your last line of your last lower high right here, 37.12. We can get a decent size retracement into maybe 3600, could set up for the potential daily trend change. However, if overall markets are weak, guys, I do expect this consolidation to continue. Just looking for a weekly higher low, anything pretty much above 28.33, looking for that weekly higher low for the potential weekly trend change back to the bulls. Looking very good. My ideal location for entries on Ethereum at this point, guys, I'll probably be looking for as close as possible to oversold conditions as we can get. Haven't really seen oversold conditions, guys, much since last fall as well, right? So that, in my opinion, could start manifesting in this lower range of support right here, talking about 3,200 all the way down 3,000. If we get a dip down into there with close to daily oversold conditions, I may make a little bit of a swing trade on Ethereum. So hopefully that helps everybody for the overall guide for the crypto markets. Now moving into Apple. Apple showing a little bit of weakness here today, 0.82% to the downside. And we were saying here, guys, watch the 12 EMA and the 4-hour downtrend. So far, an ever so slight 4-hour downtrend. Not the biggest red flag. I would keep a very close eye on this on Monday's trading. If we kind of blow through this level on Monday's trading session, daily consolidation will continue at that point and could potentially get could potentially accelerate a little bit more, right? No longer 4-hour overbought conditions, no longer hourly overbought conditions either with this consolidation sideways, but the bulls may just need a little bit of rest right now after really blasting through the all-time highs, right? So what are we looking for on Apple? Anything above 192.71, just looking for a daily higher low for the trend continuation. Keep a very close eye here, guys, on your 4-hour trend. The whole time we're in a 4-hour trend here, guys, before it reverses. When you see the sign of reversion, guys, measure the size of the move down, right? So as of now, guys, the bears have only pulled back about, let's call it about 30% of the move, not too much. But if they pull back too much, guys, into the 618, into 203 before starting to reverse again, you may just be trapped in a little bit of a tightening range. That is a big move down. But if we stop out right here before the 4-hour trend starts reversing, then the bulls do have a very good shot at pretty much recapturing your all-time highs. Hopefully that makes sense on Apple. Personally, myself, guys, I'm really sidelined on Apple. I need to wait for them to form a better base of support for us to be basing some levels for some swing trades, because as of now, the most recent levels that we can base any swing trades off of are pretty much 198 prior all-time highs, unless you're just going for pure momentum speculation continuation, right? Moving on to AMD right now. AMD really not doing a whole lot of anything, guys. AMD still perpetually trapped in this area right now, but I'd be careful with AMD now in light of our kind of market weakness that we've been having over the past week and so few names doing so much of the work, guys. I'd be very cautious about even AMD, even if it has been kept relatively low, right? Coming into an environment where we have to be more cautious, guys, we have to get very greedy with our prices that we want for some of these shares. So even though AMD is holding up this nice level at 160, obviously if the floor comes out of the QQQs, guys, well, this daily downtrend will continue, and we may even revisit our lower range of support down here, which is around the 150, which is coupled with the 200-day moving average as well. On the weekly, still on the weekly, what are we looking for here, guys? Continuously looking for a weekly higher low for the trend continuation. But as I said, if the markets become a little bit weak, expect the bulls maybe to give back too much of this move, and then we just may be caught in, at best, a weekly tightening range. At worst, another weekly downtrend, which could really send us down into 142 in the event that the SPY and QQQ consolidate for 2-3 weeks in a row. I would not be surprised, guys, if we do revisit the lower 150s, maybe even some of the 140 handles. So my swing trades on AMD at this point, to be very greedy with it, have to be below 150. I will be eyeing 150 all the way down to 135, writing short puts, depending on the size of the drops if they start manifesting. That being said, the bulls still have a good chance of reversing this in the event the markets continue marching higher, rotation actually becomes more healthy. What we'll be looking for on AMD, same thing as always, guys. Need to eventually start making a move, making an attempt into 169.49 and resetting this daily uptrend. And really only then will we start getting that weekly trend expansion. But the daily trend confirmation needs to happen first. And so far, no signs of that just yet. Now, give me a quick second. All right, so moving on to Amazon right now. Amazon down about 0.09%. Not too bad on the day, though. Amazon's still holding up relatively well. So in the context, Amazon, of this daily downtrend right now, engulfing move, looking to set up for the daily higher low for the potential daily trend change. Now, we'll keep an eye on Amazon, guys. Amazon is obviously not immune to overall market movements. So if the markets really do start getting, start pulling back a little bit heavier, right, we could potentially expect a rollover on Amazon. Now, that being said, guys, it is going to offer us an opportunity in these lower levels down here, talking about pretty much 177 down to about 170. This whole green box range is our previous all-time high range of consolidation. It's going to be very tough, in my opinion, for the bears to fully get through this location, right? That being said, I'm also going to be a little bit more greedy on Amazon short put strikes. And going forward, I'll probably be looking for 177.50 all the way down to about 170, depending on the size of the pullbacks, if and when they start happening. That is where I may bring in some buy criteria for Amazon down here. But as of now, guys, there's nothing on the charts that says we're going to do that, right? I'm just trying to prepare everybody in the event that it happens for a trading plan, right? But as of now, the bulls look very, very good, rejecting off our 12 EMAs and our moving averages as a whole, looking for that trend continuation. But if we don't get it, I just want to give a contingency plan if we potentially revisit some of these lower levels in the mid 170s. Moving on to Google right now. Google also not having the worst day at all, up about 1%, and really kind of trapped in this tightening range at the top end of your move at the all-time highs. So what are we expecting on Google right now? Well, Google is really going to be beholden to the overall direction of the markets, as we've been saying, right? So Google right now, not looking, not looking the worst, as a matter of fact, really just sideways consolidation at the all-time highs. I would be a bit worried here, guys, if we start losing the 173. Start losing the 173, you could set up for a daily downtrend event right there, and it could be a larger form of weekly consolidation. Couple that with the fact that the weekly higher lows are really not that far at all, guys. They're all the way down here, 170, 131. Not that far at all. If you crush this level right here, you would be losing your weekly uptrend, and then we would have to be looking at more solid levels such as the 165 to really act as that last line of defense for the bulls, right? Coming in and maybe looking for even a monthly higher low for some potential trend continuation later on in the year. So a lot of names, guys, looking like they may want some larger form consolidation if the overall markets do support that narrative as well. Obviously, if the markets continue grinding higher and the market gets a lot more broad in the next week of trading, well, then I do expect Google to just continue its grind higher towards the all-time highs, and then potentially continue this weekly uptrend and eventually, guys, hit that infamous 190 next level of resistance. Moving on to Meta right now. So Meta also not looking too bad today, pretty much flat on the day. Meta is pretty much trying to do the same thing, right? Daily uptrend confirmed right now, looking for the daily higher low for the potential trend continuation. Where could Meta potentially pull back into? Well, the first line right here, pretty much your 12 EMA, and then all the way down here, worst case, well, not worst case scenario, but the extent of the pullback could potentially bring us down into the 482 level, big prior support level for the bulls, prior resistance as well, and could just be a breakout retest pattern before retesting these highs for Meta. So this could be a little bit of a swing trade opportunity for Meta as well. All in all, the bulls are looking fairly healthy on Meta. Nothing bad to say. Weekly uptrend as well. So just keep that in mind here, guys, for the short-term price action. We'll take this one day at a time, right? Obviously, you would not want to see Meta, right, have a negative 3, 4, 5% day and crush this level. It would invalidate that trade as a whole. So just keep that in mind on Meta. As of whole right now, guys, no red flags for the stock whatsoever. Moving on to Microsoft right now. Microsoft having a relatively decent day as well, starting off red and ending pretty strong into the close. So as of now, guys, Microsoft still in this one massive leg higher. Still no daily uptrend, guys. This is one single move, right? Pretty much higher lows on every single candle and higher highs on every single candle. We really have not had much of a pullback into a daily uptrend. That being said, guys, coming into a little bit of overbought conditions on Microsoft as well, and we're really beyond the all-time high range. So any consolidation, guys, going to be looking for a daily higher low, pretty much anything above, talking about 404, right? Anything above 404, just going to be looking for that daily higher low for the trend continuation. Where could we maybe come back into for a first stop on Microsoft? Well, the previous all-time high seems like a very good location to me. Prior resistance going to be for newfound support. And the 12 EMA is right there as well. So we could see a little bit of a bounce attempt for the bulls. But if ever they then roll over this bounce, you will know that we will be in for weekly consolidation, very healthy weekly consolidation, because we're in a massive weekly uptrend. Any move lower, just be looking for a higher low, anything above 404.50, higher low for continued weekly trend expansion. Microsoft is looking very, very strong right now. Moving into Netflix. Netflix also finally breaking above its range of consolidation, 2.5% to the upside, looking very, very good. New 52-week highs at this point, and new daily uptrend as well. The weekly trend expansion is now underway. I was saying that this was pretty much a bull flag for the last 2.5 weeks of trading at this point, and now you have your results from that bull flag, a clear break to the all-time highs. So what are we looking for now, guys? Any pullback at this point, going to be looking for a higher low, anything above 635. higher low for further trend continuation. Where could we maybe pull back into? Well, the prior range highs right here around 654. The 12 EMA, this moving average right here, should be doing a good job curling up into this area. Could be a little bit of a touch and maybe run further. Where could we maybe run further on this weekly new leg higher? Well, you'll be targeting pretty much your all-time highs, guys, at about $690, $700. Looking excessively strong on Netflix right now. Now, moving into NVIDIA. So NVIDIA just continues its march higher, 1.75% to the upside. Very, very overbought conditions on NVIDIA right now. Now, I understand NVIDIA can stay overbought for a very long time, but we still have to recognize, guys, that we are coming into a little bit of overbought conditions on NVIDIA, while the overall indexes that it's a component of, namely the QQQ, also overbought conditions, and SMH, also overbought conditions. In other words, am I saying that NVIDIA is going to have a huge drop here soon? No, but we just have to start being a little bit more cautious at these levels, guys. May not be the best time to buy NVIDIA as a first position all the way up here, right? If you're holding the stock, I still see, I still don't see any major red flags for a huge pullback correction on NVIDIA, but we may just want to be a little bit cautious on our future expectations, given that the stock has run so hard since its most recent earnings, guys, talking about a 40% rally. Now, trust me, guys, when I say this, I don't want to sound bearish. NVIDIA is still one of my favorite stocks in the entire market. I'm just trying to be, more safe than sorry, not only for myself personally, but also maybe for people who are invested in the stock and maybe have a ton of gains right now. Covered calls, guys, is never a bad thing, So daily uptrend is confirmed right now. Still very, very beautiful. Any move lower at this point going to be for a higher low. Anything above 117. Looking for that for the higher low for trend continuation. Where can we maybe pull back into? Well, first line is going to be right here, 124, and the 12 EMA is probably going to be curling in there as well. Now, one of the major quote unquote red flags for downside continuation, guys, would be a pullback that would be too severe, right? If we give back this entire move or close, could be setting up for the daily lower high into lower low. And that would just be a weekly consolidation attempt by the bears right there, looking maybe for the weekly higher lows, anything above 75.31, looking for the weekly higher low for a little bit of trend continuation as well. Similar to exactly what we got here, right? Just some healthy pullback into a next leg higher. The markets eventually do need to pull back. So we need to be on point with our position management when we may have the ingredients of a pullback forming right now. Now, moving on to Tesla. Tesla down 2.44%. So unfortunately, guys, Tesla refusing to break out even after the vote went in their favor, even after bullish CPI. Tesla just not having it, guys, coming back into our range of consolidation. Now, yes, we are still above the 177.66, above our short-term moving averages, which are all kind of compressed together right now. You can see them right there, right? So we are currently trying for the daily trend change, anything above pretty much 167.21, looking for the daily higher low for the trend change into the higher highs. The only problem now is these highs, 191, are a bit far away, right? Tesla from that high down about 7%. So it's going to take the bulls a lot of momentum to really get back up here and smash it to new all-time highs. So we're going to take this one day at a time. We will see if they can do it. However, if we see a lower high, maybe lower low, daily downtrend will be started once again, and we'll be looking to our lower end of support once again, guys, to act as our last line of defense, talking about the 173 area. So very unfortunate for Tesla, not able to really break and close above, but not looking too bad. The bulls are still trying to form up something, so we'll give them a little bit of space, a little bit of time, and see what they can do. Moving on to Palantir right now. Palantir not with the worst day at all, about 1.29% to the upside, and Palantir really trying to protect this daily uptrend as best as it can. Pretty much any move lower was looking for a higher low, anything above 22.70 for the daily higher low for the potential trend continuation. Now, keep in mind what happened today. We were in an hourly downtrend, which was daily consolidation, right? You guys know the drill. As soon as you lose your hourly uptrend and get into a severe hourly downtrend, daily consolidation is underway. Now we have a little bit of a trend change attempt by your bulls. So if we can break today's high on Monday, well, your hourly trend change is back. You know that your daily next leg higher is pretty much underway, and we will be tackling pretty much the 2430 level. Excuse me, got something in my eye. 2430 level for that daily trend continuation. Now, if ever the bulls are too weak and the overall markets pull us down and we lose the lows, set up for the daily downtrend attempt for the bears, that's okay, guys. We still do have a decent amount of space from this most recent weekly move. Anything pretty much above 20.5, looking for the weekly higher low to get this weekly trend change back to the bulls underway. Not looking too bad at all. And you guys know, if ever in a couple of weeks, guys, we're back down into the lower 21, $20, $19 level, I will be once again writing short puts on Palantir because I do believe it stands to gain a lot from this AI narrative, even more than people are currently pricing in. I do believe we will have a great chance at attacking the $28 level at some point this year. Now, lastly, moving into PayPal. So PayPal continuing its decline today, 1.47%. And unfortunately now PayPal, guys, has done the one thing that I did not want PayPal to do. It has now broken our last line of defense support to the downside. That was pretty much the $61 level, trading under that right now. So pretty much giving back the complete move right now. Any move higher at this point in time, guys, the downswing is so severe that any move higher just gonna be looking for the lower high. Then it'll be up to the bulls, depending on the size of this bounce, it'll be up to the bulls to reset into a daily uptrend. But if the size of the bounce is too weak and we use this entire level right here as resistance, right? If we pull back even further, it's going to get worse. We're going to use this level as resistance and then most likely retest these lows. That's why my current level for this stock for playing short puts, right, for getting some premium on this is now going to fall into 58.57. When we get a period of time, guys, where the bottom half of the market is not cooperating, even though our yields are dropping, which should be good for financial stocks and fintech stocks, when that is not being the case, we have to be a little bit careful. That's why I'm going to be very, very greedy on my PayPal strikes, most likely eyeing 58, 57 if I do play it at all. My more favorite pick right now in fintech is a combination of Square and SoFi, just because their growth rates are currently better than PayPal's, right? So that's the only reason. I still like PayPal as a stock, but we cannot deny what happened to the technical price action here today, guys. Complete loss of the daily and also complete reversion of the weekly. It was looking great here for a weekly trend change attempt to the bulls. Now completely engulfing move to the downside, weekly downtrend now back to the bears. So we fall back to our primary line of support, $57. So that was pretty much everything that I had for you guys today. Hopefully you guys enjoyed today's video. Now let's take a brief look into my portfolio and see the trades that I concluded for the week. All right, guys, so taking a look at the positions, well, we can see that we wrapped up the week pretty decently, guys, but I did go a little bit light this week in terms of CPI and whatnot. And since CPI was such a bullish event with the Federal Reserve as well, I really wasn't able to find any further positions after CPI. So went a little bit light this week, was really taking, a page in my own book and being a little bit more risk averse leading into these events. And that was not so much a bad thing, guys, because as we were seeing, a lot of the market just continued to plunge after CPI results, only big tech really running higher. So that being said, guys, in terms of the positions, SoFi still running these SoFi $7 calls. They pretty much expired today, so we get to collect all 17 cents of premium. Now, the only problem is that SoFi came down a lot today. So SoFi's one of SoFi's original investors, actually the fourth largest investor in the company, pretty much liquidated all of its positions today. That was pretty much a Qatari investment fund, and they had a very large position in SoFi. And when the news hit the tape pretty much that they had been pretty much selling since yesterday, the reason for two large candles right here, it did spark a lot of fear in the eyes of retail. SoFi coming down to about 6.46. Our average cost, guys, on the shares that we acquired at 7 with the put premium and with all the covered call premium that we've been getting over the last 2.5 weeks at this point, our average cost is not too bad. It is actually down to about 664. So not too far above the current share price right now. I'm really not too worried about this one at all, guys. We're pretty much hitting year-to-date lows, and I do believe the valuation of SoFi in the lower 6 range is pretty decent. So I'm really not too worried about this position. Not that big of a position for me either. It's just unfortunate now that at these lower levels, I won't be able to really write any covered calls just yet. Gonna need to see a little bit of rally back maybe into 670, 680 area to unlock those covered calls for me. But as I said, guys, this is one that I am fairly comfortable holding. Now, Palantir, we did get called away on Palantir this week. So unfortunately, there was just no premium to roll any covered calls for next week. We were getting maybe 7-8 cents of premium, which is just not good enough. I wanted to see at least, 13-14 cents. And although it did appear very briefly in the morning, guys, I was just comfortable letting this one go in the event that we get continued market weakness and it pulls Palantir down. Maybe I can just re-enter the position in the lower $21 range once again. So this one got called away. A very juicy trade, guys. We've been in this one for about 6 weeks at this point. Got assigned on Palantir at pretty much, between $22 and $21. It gave us an average cost at time of assignment of about 21. Let's go check it right here, about 21.08. But we've written over the past 5 weeks, we've written so much premium on covered calls that our average cost on Palantir right now, guys, is pretty much sitting at about 1960. Very juicy trade, guys. Our average cost is all the way down here, and we just sold at 22,600 shares, right? So 22 minus 1960, that's 2.4 times your 600 shares, right? So we get a profit about 1440. That is a very decent profit, guys, for about 6 weeks of trading. Divide that by about 6 weeks. That's about $240 per week on our cost of assignment, roughly. That's about, for all intents and purposes, guys, let's call it about, anywhere between 2% pretty much a week, right? So really good performance on Palantir. Very, very happy with the way this one played out. Can't say anything bad about it. As I said, I will do it again if ever it comes a little bit lower. Now, we did have a couple positions that expired worthless. So AMD, the 155s, they just pretty much expire worthless as AMD closed above 155. CLH, oh man, CLH, right? So CLH, as of today's trading, CLH was actually worthless pretty much all morning for about 2 cents on this position that I wrote for 42 cents. We were down to 2 cents all day. And then in the last minutes of trading here, guys, I was pretty much on my phone at the gym, pretty much back here, 3 o'clock. And I saw that we, although we were coming down a little bit, we still have a lot of cushion before 60. And I was pretty confident in the stock's ability to close above 60. Boy, was I wrong, right? In the last 1 minute of trading here, guys, closing below $60, $59.96. So pretty sure that I get assigned on this one, guys, but is it that big of a deal? No, it is at the lowest point of my support range right now before we come into this lower area right now in the $50 zone. So I am expecting a little bit of a bounce from here. Even if we do continue lower, I'm expecting a little bit of a bounce, guys. 20% down in one single week. Take a look at this week, guys. This was pretty much a 19% down week. And the past 3 weeks, guys, this is pretty much top to bottom, a 40% move to the downside. We are now oversold conditions on CLH. We don't get oversold conditions on the daily on CLH that often, but when they do happen, we usually get a little bit of a bounce. So I will be looking, even if I get a sign next week, guys, let's say we get a little bit of a bounce on Monday, guys. Because of the overall state of the market, I'm going to be very greedy on this one. If you get a bounce back into the 62, 63, I may just sell the shares without writing any covered calls, and then I may look to reposition lower in the $55, $50 range, guys, right? Not that I'm bearish on the stock, but as I said, in these times of uncertainty, with markets at all-time highs and very weak market breadth, you need to be a little bit cautious. So this is how I'm being a little bit cautious on CLH. I do have a position right here, but as I said, I will be looking to maybe sell that lower high into maybe lower low continuation until we really start getting some bottoming out action on the weekly. So far, waterfall drop, pretty much catching a falling knife at this point, but it's only one contract right now. So that's how I'm going to be playing it into next week. Now, GameStop, we actually still have the GameStop share, guys, still with whoever's in this one with me, guys. I just wanted to throw in a little bit of participation money a few weeks ago. So now on GameStop, guys, we got 100 shares at $38, but we were able to write covered calls 3 times for a lot of premium. Now you can see my 29.5 calls. They expired pretty much worthless. So we collected a full $630 for those this week. And for next week, we wrote the 29s. There's no 29.5s for next week, unfortunately. We wrote the $29 calls for about $3.30. Our average cost on GameStop now, after the $38 buy and all the premium that we wrote so far, 23.54. So still low. If you get called away at, let's say it ends above 29 next week, by some magical power of the stock market, right? If we end above 29, which if the markets are weak, I'd be highly surprised, right? But in the event that we do, guys, end above the $29 mark, we'll all be collecting the difference between 29 and 23.54. So far, we've built up about a $550 cushion in that, looking pretty good. And as the weeks move on, guys, I'll try to get this cost basis as low as possible so that eventually when we do get a little bit of a pop and it closes above my call option strike, maybe we finally get to be called away and get some of that juicy premium into our pockets. So far, so good. Just riding this one with the rest of the market right now. Not a very high conviction trade for me, but I will continue playing the momentum as it is still here. Now, moving on to Pepsi, we just got assigned 100 shares of Pepsi as well at about $165. So our average cost minus the premium will be about $164.30. Not looking too bad. Pepsi is really having, it's not just CLH, it's Pepsi, it's Coca-Cola, it's Monster Beverage, everything really coming down brutally in the last couple weeks of trading right here as Pepsi has voiced concerns over the weaker than expected volumes. But that's no secret, guys. They've been saying this for pretty much 9 months at this point, right? So we're coming down into a very large area of support, tagging the 200 weekly moving average. We very rarely tag the 200 weekly moving average, guys, once during COVID, and then again, this time back here in 2018. But every time you see we tag it, we usually have a good chance of rebounding relatively quickly from this location right there, similar to what we did back here. So that is what I'm looking for here. Going to be looking for the bounce trade on Pepsi as well, and daily oversold conditions on Pepsi, guys. It doesn't get daily oversold too often. I mean, it hit it really hard back here, but usually daily oversold conditions, guys, don't get too oversold. We do have the chance to get a high bid on the stock right here. That's all I'm looking for. Little bit of retracement here on Pepsi, and most likely similar to CLH. If we get a nice little pop next week into the 166, 167, guys, that is probably when I'm going to be writing either covered calls or just selling shares outright. I will sell the shares outright, guys. If I see next week SPY, QQQ, XLF, and XLV red at the same time, most likely I'll just be happy getting out of the shares, guys, and maybe getting a second attempt if ever we revisit these lows. So all in all, fairly confident about my position on Pepsi, but I'm also going to be very greedy on the take profits on these. Square, $68 calls, ending worthless. So now we still have our Square shares that we were assigned at 67. Our average cost now on Square, guys, is right around 65.50. So not the worst, but still above the current share price. We're still down right now, you know, roughly about, let's call it about $3.5 per share, right? So now moving on to Visa, we still have the Visa put credit spread right here, 270, 265s. I still like Visa a lot, guys, at these levels. Seems to be like a nice bottoming out area of support. And this is a stock that usually when the overall markets don't have the best time, this is one that is usually fairly resilient. So I'm very confident in that position. I have a lot of time on this, July the 12th on those. We still have our Amazon Leap calls right here, still have the CLH calls, which have lost pretty much all of their value. I tried to make an initial call play on CLH when I thought that the reaction on the Wednesday session was a bit too much. And unfortunately, guys, we got a little bit burned. It dropped even further. So I'll maintain those, maybe looking to add a little bit of the position, but only if we can manifest into a new daily uptrend, or at least a daily uptrend attempt. This is when I'm going to be taking another swing on call options for up here, and the stop will be going below the lows. Hopefully that makes sense. So unfortunately, call options as of recently, the most ones that I've tried in the last 2 weeks, Tesla and CLH, unfortunately have been losses, guys. This is the problem with long options. Sometimes the idea may be good, but unfortunately, guys, the timing of the call options sometimes can be wrong, which is why I favor, at least on the channel publicly as a trading strategy that I quote unquote promote, right? I always prefer selling options, guys. I always prefer selling options because you are the one collecting this time decaying premium. Now, that's pretty much everything, guys, for today's video. All the rest of the positions are maintained. Took a little bit of a bath here on my Canadian banking shares. Canadian banking shares down a lot, which has brought the portfolio down a lot as well. Keep a look here, guys. In the last 1 week and a half trading, that's pretty much, $1.50, almost $1.50 worth of drop, which on 1,000 shares, guys, obviously is a lot, right? Talking about $1,500 down on this position, very much, pretty much in the blink of an eye, retesting the levels of February. So those were some major contributors to some downside in the position this week. Still have the shares of Intuit as well. So guys, I'll continue to be transparent with you. I'll continue to show you opportunities in the market when they present themselves. But as I said right now, going to be a little bit cautious here leading into the next 2 weeks of trading. So hopefully, guys, that was helpful. Hopefully I didn't sound too bearish. I'm just trying to be safe rather than being sorry, right? So hopefully you can appreciate that. And if you have appreciated that, guys, consider dropping a like on the video. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these daily market recaps every Monday through Friday after the close. And as usual, guys, if you have any questions whatsoever, leave them down below in the comments. If you want me to take a look at one of your symbols or tickers tomorrow, leave it in the comments and I'll take care of that in tomorrow's subscriber request video. If you have any other questions whatsoever, guys, technical analysis, options trade, whatever it is, guys, leave it down below in the comments. And please, for the future, if you do want to get my opinion on an options trade, right, just leave the context of the trade in the comments, right? What are you looking to make out of the trade? When did you enter? And what is the potential thesis behind why you chose those options? It's going to allow me to identify the overall strategy a bit better and maybe help, give me better insight as to how to better manage such a position, right? So hopefully that was helpful, guys. Take care. See you tomorrow. Take care and peace.